Hello, and welcome to myfinanceteacher.org. It's time for our weekend overview of a range of assets. Starting with gold, we see that gold is performing really well, but my positions on gold a couple of days ago have reduced significantly from around 87% down to a small allocation of mostly silver-related assets. Looking at the chart of gold, the short-term daily cycle on gold is now 49 days old. These usually last for about 1.5 to 2 months. Of course, that can be stretched, meaning that we possibly still have another 2 to 3 weeks to see the end of the short-term daily cycle. That's when we'll probably see the low for gold price in the short term. So generally, I'm happy that my stop losses have triggered a partial take profit on quite a bit of my positions. And I'm happy because gold does look a bit too hot at the moment. Multiple pokes through the upper range of the Bollinger Band. The 14-day RSI is really high at 81.6. The daily cycle is not stretched, but it's highly likely past its midpoint. On the other hand, though, can gold go higher from here? Yeah, I guess that is possible. The current stretch above the 50-day moving average is under 8%. And if you look at history, there have been cases in the past when the stretch above the 50-day moving average near the end of the intermediate half-a-year cycle in gold was quite a bit higher than 8%. In the previous cycle, the stretch was just under 7.5%. In the cycle before that, that's around summer last year, gold price itself stretched by 8.7% above the 50-day moving average. A couple of times before that, the stretch was insignificant, 4 and 5%. In autumn of 2017, another insignificant stretch of under 7%. But if we go to the beginning of this bull market in gold, that's 2016. In early 2016, the stretch above the 50-day moving average near the end of that first cycle in 2016 was nearly 10%. Additionally, if we pretend that we are, let's say, in February of 2016 and hide the rest of the candles over here, let's say this is what we see on the gold price. Multiple pokes through the upper range of the Bollinger Bands, and 14-day RSI is deep into overbought at 80.6. Anyone would say here that gold is getting a bit too hot. Did the price move up from here? Yes, it did. It moved up from $1,200 exactly all the way up to $1,260. And a bit later, even higher, up to $1,280 or so. So a continued push higher from here is possible. Anything is possible, but I don't think it's very likely. Remember, nobody knows the future. What we are doing here is we're trying to position ourselves based on probabilities. Whenever the gold is hot, although it might get even hotter, you really want to protect yourself. Have some tight stop losses or take some partial profits. Especially when the intermediate cycle has already been going on for 126 days. Usually these last for half a year, so 180 days. Meaning that we possibly have only another 2 to 3 months until the intermediate cycle finishes with its intermediate cycle low. And the way that's going to happen is probably we're going to see the short-term daily cycle finish sometime in another 2 to 3 weeks, followed by a short-term bounce into the last short-term daily cycle of the ongoing intermediate cycle. And as I often mention in a lot of my videos, intermediate cycles often give us a lower low. So the intermediate cycle low a couple of months later will be our lower low compared to a possible short-term low 2 to 3 weeks from now. Next, let's have a look at a monthly chart of gold. Let's see how many green candles a monthly chart has given us recently. And of course, no asset can give you constantly green candles. Nothing can go up forever. So let's see how the count of green candles stacks up against some historical performance. At the moment, July is nearly finished. Today, by the way, is 26th of July. if you are watching this video on YouTube rather than as a member at myfinancesteacher.org, you are likely watching this video a couple of days later. I'm going to make this video public with a couple of days of a delay. But in our business, a couple of days is a big deal. Look at what happened to Ethereum, for example, in just a couple of days. It's moved all the way from around $270 to $314 at the moment. That is a 16% gain in a couple of days. So if you want to get timely and more detailed updates on a range of assets, consider joining us at myfinancesteacher.org. So back to the monthly chart of gold. So far, if July closes green, which I think it will, gold chart is giving us 4 green candles on the monthly chart. The intermediate cycles in 2019 and 2018 also gave us 4 green candles. The previous cycle only gave us 2. So moving back through history, I'm going to only mark a set of 4 or more green candles. And beyond 2018, going back in history, we have to move all the way back to 2012 to see another set of 4 green candles. And further back beyond that, in 2010, we saw 5 green candles, with another 4 green candles in 2008, 2007, and 2004. And we have to go back all the way to 2002 to see a set of whole 6 green candles on the monthly chart of gold. So even 5, never mind 6 green candles on the monthly chart are a pretty rare event. Each of those happened only once in the last 20 years. So is it possible that we're going to see green August pushing the gold price closer to, let's say, $2,000? Well, yes, it is possible. But is it likely? I don't think it's very likely. So that's the monthly chart. We continue with the monthly chart of gold, looking at what might possibly happen to gold over the slightly longer term rather than the intermediate cycle. As you might have noticed already from this chart, there is a high possibility of a cup and handle formation playing out over the next several months. We see a cup, a huge cup formed over the last nearly 10 years, as the ongoing intermediate cycle is pretty late and as the gold price is pretty hot, as we've just mentioned. There is a high chance of some sort of a handle on this cup and handle formation forming as the ongoing intermediate cycle goes into its descending phase and gives us an intermediate cycle low, maybe somewhere around 1700. So that would be a nice cup and handle formation before we start the ascending phase of the next intermediate cycle in gold. Such a formation on the very long term, over the next several years, would have a measured target of, let's see the height of this cup. It starts from, let's say, 1100. Let's be conservative here. Up to 1900. That's a depth of $800, giving us a measured target above this rim of the candle of $800. So $1,900 plus 800 is going to give us, it's going to give us a measured target of around $2,700. Wouldn't that be amazing? And given the huge amounts of money printing over the last few years, especially more recently over the last few months everywhere in the world, I think $2,700 per ounce of gold is pretty doable. That's not tomorrow, of course, and probably not even this year. But over the longer term, I think it's very likely. Let me know in the comments, what do you think of this projection? If you have a minute, why not check out one of the older videos on my YouTube channel forecasting gold price of 2021 by the year 2021. The link to the video is at the top of the screen right now. Next, let's move on to Ethereum. Quite a few days back, I, together with the members at myfinancesteacher.org, we entered Ethereum where it was just above $235. That was sometime just after the mid of July. Since then, with the current price of $314, that's over 33% gain in just a couple of weeks. I think that's amazing, and that's just another push, nudge, hint, for you to possibly join us at myfinancesteacher.org. Unfortunately though, I had my take profit order at $286 and I got out of Ethereum a little bit prematurely. I did mention though that on the 4-hour chart, this chart on the screen at the moment, there was a chance that Ethereum was going to poke again through the upper range of the Bollinger Bands, which it later did. At the moment though, I think Ethereum is pretty hot. The Ethereum cycle is on day 29. Usually these last for 51 days on average over the last couple of years. So we are highly likely past the midpoint. RSI is very high at 83.7, and we see the price considerably higher above the Bollinger Bands, never mind the 50-day moving average. So I think a cool-off is very likely on Ethereum over the next couple of weeks, and that's when I will try to re-enter, as I think over the long term, Ethereum as well as Bitcoin are going to do amazingly well. So moving on to Bitcoin, as I mentioned to the members at myfinancesteacher.org, we saw this ascending triangle on the 4-hour chart. This is the chart we saw yesterday, and the height of that triangle is $140, giving us a measured move up to 9,770. The height so far is pretty close to that at nearly 9,760. So do we want to take some partial profits on our Bitcoin positions that we've held since the price of 95.40? Well, I'm not sure about that yet. At the moment our gain is 2.4% or so. Let me ponder about that a little bit, and if I come up with anything, I will make a post for the members at myfinancesteacher.org. So let's keep our ears perked up for what Bitcoin is going to do relatively soon. On the daily chart though, looks like the ongoing Bitcoin cycle is on day 29. We are pretty close to the midpoint. Usually these cycles last for about a couple of months. The 14-day RSI so far is only at 65.6, so I think there is still maybe a week's worth of upward momentum in Bitcoin. Usually these Bitcoin cycles bottom below the 50-day moving average and top somewhere above that 50-day moving average. At the moment, Bitcoin is only about 4.2% above its 50-day moving average. So although we've seen several pokes through the upper range of the Bollinger Bands, I think in this case, these pokes are not as important because the bands have been pretty narrow recently. And with a stretch of only 4.2% above the 50-day moving average, I think there is still momentum in Bitcoin price to close above this recent high we saw on the 22nd of June and come a bit closer to $10,000 or slightly higher than that. If you want more details on our stop losses as well as our take profit orders, join us at myfinancesteacher.org. Next, let's have a look at S&P. As I mentioned, when I was unfortunately stopped out of my position on the 9th of July, I didn't really want to chase this move higher in S&P, and looks like over the last few days S&P has been sliding down a little bit. Although the ongoing short-term daily cycle in S&P 500 is only 25 days old, usually these last for about a couple of months. And next week we're going to see FOMC meeting. With the market sliding down, I think there is a pretty good chance that the Fed is going to talk a little bit dovish to help the markets higher. And that, together with the fact that the ongoing short-term daily cycle is still not that old, I think that means that sometime next week there is going to be a push a bit higher in S&P 500. Are we going to break the recent highs or not? I'm not sure. That remains to be seen. And after that, as the news of dovish Fed wears off, we'll probably see the drop into the short-term daily cycle low, giving us a usual duration of around a couple of months. And looking at the intermediate cycle, it's 123 days old. And as these usually last for about a half a year, I don't think there is a huge upward momentum coming up in S&P anytime soon. I think over the next couple of months, we probably should see some sort of a correction before substantially higher S&P. Next, looking at crude oil, it's flat. It's just flat, nothing interesting going on here. As I mentioned in my recent video, I do expect quite lower oil prices relatively soon, sometime into autumn. So the strange thing here is why I'm still holding the energy positions. Well, The thing is, energy was oversold recently, and at the moment our stop loss is above our entry price. So if S&P drops and if crude oil price drops over the next, I don't know, 1 or 2 months, stock prices of energy companies might also actually drop. But whatever happens to the energy companies, we're not going to lose money. Our stop loss is already above our entry price. So we are sitting comfortably here. So that is all for now. Let me know what you think. I really hope you guys are having a fantastic weekend. For those watching on YouTube, I hope you're having a nice beginning of the week. I wish you all the best and good luck in your trades.